Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spotted. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, lots to talk about today. Let's come over the charts. Well, hold on a second. Did we get the... I thought we were before the number, but let's see here. I'm not getting the initial jobless claims. Let me refresh here, make sure I'm... Okay, 223 versus 224. So we're getting a little bit of a sell-off. Interesting. Okay, let's come to the charts. Check things out since yesterday. So the Federal Reserve meeting ended up being, well, pretty good, but, well, this is where it kind of gets weird. So, like, oh, I guess maybe it was. There was a pretty good rally after things closed. So that was kind of weird. But the market generally reacted to the Federal Reserve meeting positively. So you can see treasuries moved up. Equities moved up. Oh my. So it looks like the equities are falling overnight, though. I wonder if there's a new headline that I have missed, because that was not covered in any of my morning synopsises. Let's check out the other assets. Oil. Okay, a little bit of a rise since yesterday. Gold. Well, gold taking a bit of a breather, I think. Silver, a little bit more extended of a down move. Copper, still up there as well. Japanese yen getting a big boost yesterday, and the dollar coming back. Oh, that's interesting. In the Bitcoin, not really doing much of anything still. Not sure what to make of that. Let's expand this over here. So here's the Federal Reserve meeting. You can see, actually, so that's interesting. I wasn't sure if the initial statement would have been seen as a positive or not. What I had read was mostly the press conference viewed very positively. And there you can see, starting from probably about 12:30. That bit right there would be the press conference. So what I see on the chart does not completely match what I have read, but probably doesn't matter. Now, coming back over here, because we are getting a decent decline here. Well, U.S. Philly Fed Business Index, that was also released, 12.5 versus 9. The continued jobless claims is higher than expected and higher than last month as well. So that's a good 20,000 more people on the continued jobless claims. That is not good. That is not good. That means I'm not the only one having a hard time finding a job, man. Well, interesting. Okay, so for us, the big news, Kraken to buy NinjaTrader. I saw Uzi told me about the headline hitting yesterday. Yeah. And NinjaTrader has like sent out messages about it now, so it is confirmed by NinjaTrader. So Kraken is going to buy NinjaTrader. Here, let me just show you the statement here. As you may have seen, NinjaTrader has agreed to be acquired by Kraken, one of the longest-standing, most liquid and secure crypto platforms trusted by more than 15 million clients globally. While I encourage you to read the official press release announcing this news, I want to directly address what this means for you as a valued NinjaTrader client. First and foremost, nothing about your NinjaTrader account or relationship will change. Your account details, funds, platform access, pricing, and the high-quality service you expect will all remain exactly as they are today. You don't need to take any action. Your trading experience will continue uninterrupted. NinjaTrader will operate as a standalone platform within Kraken's broader suite of trading and payments applications. While your current experience won't change, this acquisition means you can look forward to expanded trading opportunities, including enhanced access to crypto markets, in addition to the future trading you currently enjoy. If you are not already familiar with Kraken, they have built a powerful crypto trading infrastructure with institutional grade execution, deep liquidity, and strong commitment to security, all with the vision of enabling seamless trading of any asset anytime. By combining NinjaTrader's professional analytics and futures execution with Kraken's robust crypto capabilities, you'll have access to an even more comprehensive set of trading opportunities. We deeply value the trust you place in us, and our team remains committed to serving your needs without interruption. Should you have any questions or concerns, please don't hesitate to reach out. Thank you for being a valued part of NinjaTrader. Sincerely, Martin Franchi, CEO of NinjaTrader. I really don't know what to think of it. Here, let's do this. Show your support. Thank you. No, not that one. Start a poll. Start a poll. Is Kraken acquiring NinjaTrader good for NinjaTrader users? Vote now. I really don't know what to think. Okay, it sounds like AO doesn't like it. He's like, yeah, so I assume that means no. Let's see here. NinjaTrader forums. Let's go and see if there's anything about this on their forums. Let's go see if there's anything on futures.io. Or sorry, nexusfi.com. There we go. Kraken in talks to acquire NinjaTrader. That's big news, and I'm not liking it much. Just so on NexusFi, there is a thread about it, but only just a few posts saying that it's happening. I don't know if there's anything actually on the NinjaTrader forum about it. It would maybe be in news and announcements, but all that is stuff about new versions. Let's try latest activity. No. If I could get Jigsaw to trade through my E-Trade account, I'd totally just do all my business there. Yeah. I mean, the issue that I have is that I like the NinjaTrader 8 platform. I think that they've built the platform, and it's not even necessarily all of the technical decisions that they've made. I mean, I do think that C# works really well, and it works really well with me because I have so much experience with C#. But I think that the power of it really is more that they've built the largest ecosystem for like people to program things, and it really is the easiest to make like order flow type stuff. So I like it that way. Business wise, I don't like that I get locked into a specific FCM and that FCM doesn't have all of the data providers. If they had Rhythmic, maybe it wouldn't be such a big deal. But I just kind of always rubbed me the wrong way that they basically changed the platform into this is to force everybody to go to NinjaTrader brokerage when NinjaTrader brokerage doesn't fulfill my needs. And like technically wise, I think there's some deficiencies in it. So Uzi says, I honestly don't think NinjaTrader is going to change. Kraken wants their FCM status. There's no need to change anything else. Yeah, you just, well, but at the same time, it doesn't necessarily make sense. Like, why do you want an FCM unless, well, okay, is there reasons for wanting the FCM outside of being, outside of servicing retail customers? Is there a reason to have an FCM outside of servicing retail customers? Because if there's not, then surely at some point it's all going to be rebranded to be Kraken. And then at that point you'd have to wonder why would they want it to all be fractured like that? Doesn't make sense. You know? Especially not for $1.5 billion. See, the thing that's going through my head now is I've been thinking, let's make our own platform. Granted, the primary reason that they got acquired was the FCM. But hey, I could maybe eventually expand into being an FCM. That gives me a price tag now, right? Because they think the future involves more shitcoin derivatives, maybe. Anyways, it is a little puzzling, and I'm really not sure what it means. Oh, here we go. I go to Reddit, and the top thing that it shows me 3 hours ago. The problem isn't indicators, it's that you're using them wrong. No, the problem probably is actually indicators, but let's come on here on Reddit and search NinjaTrader today. Here's one on Buttcoin, Kraken X NinjaTrader. Here's one on day trading, futures trading, but not a lot of comments. What is Cosmic Meta? Some company or something. That's weird. So I'm seeing a decent number of posts about it, but not any comments. Well, r/Buttcoin doesn't want to hear about it. And the guy's like, why am I getting downvoted? I do feel like that of the cryptocurrency exchanges, Kraken seems to be like the most serious. Like, Coinbase is definitely like top dog, but Kraken seems to have been making the most serious acquisitions. They seem like much more a corporate entity than Coinbase ever does. Like if you were to get job offers from Kraken and from Coinbase, I would expect Kraken to pay you more. Is that crazy to say? Could be dead wrong about that, but well, so far 9 votes. You guys are pretty evenly split between yes and no. Because I guess the question in my mind is this a really good reason for me to really set out trying to make my own platform? I don't think having access to a bunch of shitcoins on my NinjaTrader platform is going to make me trade them. Zen is so sexy to read with order flow. Well, unfortunately right now, I don't really feel like that Zen is giving us much. It looks to me like spread traits, possibly flatteners. Possibly flatteners, but I'm seeing flatteners across the curve. And I do see ZB buying, but then I see ZN selling and ZF sideways. So like it's a flattener just on the knob spread? That doesn't make sense. Has been a good uptrend overnight though, so that could possibly help. I want to know what is with that sell in the S&P 500. There's got to be something behind that, right? What recession and initial jobless claims hover near multi-decade lows? Let's read that. The number of Americans filing for jobless benefits for the first time remains in strong labor market mode with just 223 last week, a level it has oscillated around for 3 years now. Moreover, this broad, low level of initial jobless claims has not been seen since the late 60s. Continuing jobless claims remain around 1.9 million Americans. For now, the effects of Doge seem to be kept in line by the judiciary. In fact, the whole tri-state saw jobless claims fail. Is there a surprise to come? I kind of wonder, because again, it really seems like that for the tech market, that the job market is really, really awful and really favors businesses. But you know, and there's a lot of people on the tech side unemployed, but and white collar in general, but that's maybe like 5% of jobs. So like which sectors of the economy are picking up the slack to keep the numbers so low? This is what I want to know. Where's the pivot? If you were to make a pivot, what's the pivot? Bank of England keeps rate on hold in 8-to-1 vote. Maybe that. I don't know. I don't know. Doesn't really give me anything to explain the precipitous drop in equity markets overnight. But what I see right now in ZN is that order flow is not predicting price very well. So that means I do nothing. Or I start working on a platform. You guys want to revote on that? Now let's leave this current pull up for a while and just kind of watch it. Well, let's talk about the Federal Reserve meeting. So I think there was kind of two things that happened that I think are kind of a little bit contradictory, honestly. So one thing is that they tapered the sell-off of their assets. So I think that's the primary reason why there was an initial jump after the Federal Reserve meeting. You know, selling less bonds is generally a good thing. Markets tend to like that. The other thing, though, was that the SEP did change. The SEP is generally like more of the Fed members see 2 rate cuts this year. So the SEP for 2025 at least has actually gotten slightly more hawkish. It's kind of interesting. It's gotten more hawkish, but then for 2026 it's been more dovish. Like they almost all see that by the end of 2026 there's been at least 4 rate cuts. So that's kind of curious. And then we had the press conference, and the press conference seemed dovish, and in particular, I think the thing that came out of the press conference was that Powell, pushed back against some of the consumer confidence numbers, saying these are outliers, and saying that, basically saying that the effects on inflation of tariffs is probably a transitory thing. And so you don't want to like raise interest rates or things like that because you're just slowing economic growth even more when it's not going to help anything. So I think that has put the market into a much more reasonable place. Much more reasonable place. I still think that the treasuries are maybe a little bit too low, but we'll see. I see a lot of tailwinds now, which is to say, like going into the end of the month, you should see the end of month rebalancing flip towards buying equities. You should see the CTAs kind of all become a like buyer of equities again, and most of the big sell-off kind of forces that are at least predictable have tapered off. So my forecast for the next week or so would probably be positive in the S&P 500, barring any more trade war headlines. The order flow in ZN from 11, I wouldn't really say so. Let's see, look right here. So we got this. I don't know when the London session opens, but you kind of got, the early session, slow and steady move up until about right here. Until about right here. And since then, okay, here futures going sideways, then up, bit of a drop, actually up. But the overall cumulative delta is negative. So now if it was like if it flat, and this is continuing to go up, that's totally okay. But this is like an outright divergence. This is the price overall went up and the cumulative delta overall went down. So that means that price or cumulative delta is not predicting price very well. And ergo, that is not necessarily a situation where we want to trade. Unless we understand why. Like maybe it's because the Japanese yen is moving? No, I don't think that one makes sense though. I don't think that one makes sense. Maybe the move in the dollar. There was a move in the dollar there. So it is definitely a sit on my hands for me. So I'm looking at my camera now and I'm like, didn't I fix this? Maybe I just need to. There we go. Okay, let's read this Reddit thread. One of the most common mistakes among beginner traders is the obsession with technical indicators. RSI, MACD, moving averages, Bollinger Bands. The more lines on the chart, the more people seem to feel safe. As a colorful crossover could answer one question we all ask every day, but the truth is simple and even if often ignored. Indicators only reprocess the past. They are derivative tools, not predictive ones. RSI doesn't tell you where the market is heading, it only tells you how fast the past move was. MACD shows the distance between two moving averages. Bollinger Bands widen after volatility has always increased. Everything you see has already happened. None of those lines truly anticipate anything. They just tell you the story. Yep. The real language of the market is price. I disagree, but okay, what's moving now right in front of your eyes? Price action shows in real time what buyers and sellers are doing. It shows you where the interest is building, where a price gets rejected, where it accelerates or stalls. Reading price action means understanding how the market behaves without waiting for permission from an indicator. But price action is also lagged. Price action is also only showing you what happened. Where is this guy going? He's clearly a price action trader, but okay. There's another risk too. When you rely on indicators, you end up shifting responsibility onto them. If the trade goes wrong, you blame the MACD, the RSI, the missed signal, yeah. But trading is a decision-making process, not a signal hunt. You need to know why you're taking a trade. You need to read the context. It's not enough to know what price is done. You need to understand why it did it. That doesn't mean the indicators are useless. Some can help confirm what you're already seeing, but if your entire trading is built on indicators, you always be late and often completely out of sync with the market. Yeah, well, so indicators were really not built for intraday data. That's really the big problem. Is that these kinds of behaviors that they're really meant to see are really things for like a daily chart. This guy doesn't really seem to be going anywhere. He doesn't have like a major thesis. It's kind of like, here's my feelings about indicators, and there's not a thesis from this guy. Check Discord. Okay, cool. There's a footprint. What about it? How do I shows pretty much what I was showing earlier, which is that there's been a net selling over the past 2 bars, even though prices come back up. Trading in the okay. I don't understand what you're trying to say. There you go. Oh, so the first comment on this thread says it asks exactly what I'm saying. I agree with indicators are generally lagging and therefore not really helpful. Nevertheless, a provoking thought isn't watching the price also lagging as it only shows the pass, and thinking more generally, isn't price itself also just an indicator even though it is not a derived one? Exactly. See, the problem is not indicators. The problem is price itself is not very predictive. Since I'm tired, I'll fall for the bait on this one. Likely ChatGPT written post. I don't use indicators as much as I think that ChatGPT would have written a better post, but okay. Looking at what price has done recently, aka watching price action, is literally the same thing as looking at an indicator. They're both lagging. Everything is lagging by this definition. Indicators attempt to distill what's happening with price action using objective rules. But if you're able to do it without them, there's no difference. The underlying information is the same. It's price movement that has already happened. It's up to you to get data on which indicators or price action patterns might be predictive based on specific context. Yeah, if you can actually find them. Because my assertion is there's too much noise in price to actually do anything useful with it. If you get down to cumulative delta or the orders themselves, then it's still, I would say, quote unquote, lagging. But there is maybe some predictive information that you can pull out of it because there's less noise. But even then, it's still the past. And so really the key here is can you find something that is predictive of future orders rather than predictive of future price, predictive of future orders? And the answer that I have found is that technical data is extremely limited, has an extremely limited ability to predict orders. So there's other things that predict orders, and there tend to be more. They tend to be more fundamentally based, right? So the claim this is lagging or that is lagging is pointless. Even your news quack is like, well, that's, yeah, maybe. I mean, I think that when you hear the news squawk, it is telling you about something that has already happened, but it's also telling you something that will predict orders, right? But the difference is that the news squawk is not data generated by the exchange. It's data coming out from outside of the exchange. It doesn't predict orders, your interpretation of where... No, I think that, yeah, so my reading interpretation of it, yeah, I think that somewhere in there has to be changing expectations of future order flows and future fundamentals. That's what it is changing expectations of future fundamentals and order flows predicts orders. So the news squawk gives me information. I can interpret that information into changes in expectations. And then that changes in expectations does predict orders. Yeah, if it predicts orders, the news squawk would be the holy grail. Well, nothing can be the holy grail, though. You have a news squawk, you get information before us, it predicts orders, and it doesn't turn into profitable trades consistently to yield results. I don't know if that's true. I would say that it does turn into profitable trades pretty consistently. It's just that the results that you get from it aren't going to make you a millionaire. That's all. So it's kind of matters of degrees, right? I think that if you already had $1 million and you sat down and you just traded with a Bloomberg terminal, that you would probably make enough from it to pay for the Bloomberg terminal. That's how much edge. So I think when you come down into like, well, why isn't Seth a millionaire? Limited capital, limited ability to take on risk, right? But I don't think that really speaks anything to how much alpha is there actually in a news squawk for a short-term trader. I think that news squawk probably provides more alpha than anything else available. Is there an information source that you think provides more alpha than a news squawk? Okay, well, you can have information correctly predict the future orders. Yeah, it's not going to win every time. It's not going to win every time. And you can certainly misinterpret the news. That's a problem. But let's say that we're some super institutional trader that always gets it right somehow. I think that there's considerable alpha there. So you're still in the back of the box, so we make... Well, I think that we really should try to quantify it, you know? So that's why I'm using the word alpha. So I think that there's a certain amount of alpha that's quantifiable from a news squawk. And my assertion isn't that the news squawk will make you win every time, or that the news squawk will make you a millionaire or anything else like that. But that I think that the news squawk has more alpha in it than any other kind of information source available. So then it comes to like some of these reports that we get about institutional flows, right? Like, yeah, end of month rebalancing, we know, I know from stories I've read on Zero Hedge that the end of month rebalancing is extremely likely to be buying. And we could probably guess that from March just being a down month overall. So, I would put that behind. I would put that behind the new squawk though. Is that I would put it like a top alphas available to retail day traders. 1, new squawk. 2, institutional flow reports. 3, general financial news. 4, social media sentiment. 5, technicals. It's not the news itself that lags, it's you receiving it that lags. Okay. So, well, so I think that there's another way of approaching this discussion, because there's kind of this assumption that, it's kind of a contradiction. There's kind of a contradiction in technical analysis, and I think that if you are like a swing momentum trader, then this contradiction kind of resolves itself, but it doesn't resolve itself for the day trader. So the contradiction is that price is efficient, but that you can still make money from it. How can you still make money from it if price is efficient? Because, like, by definition, if price is perfectly efficient, there shouldn't be any money to be made from trading it, essentially, right? And the higher time frame traders can basically bank on that markets have a tendency to trend, and maybe that's partly just due to like expansion of the money supply overall as part of it. But you know, I think that the truth is that the price isn't efficient, and that this is an inefficiency that they're taking advantage of, right? But they think that the information is all there in the price, right? Well, when you come into to day trading, all of a sudden that doesn't make sense. If I'm using price as, you know, everything that I need to know is embedded in the price, then how could I possibly make money from it? Doesn't make sense. Doesn't make sense. And this tendency to like trend or anything like that, there's no really well proven inefficiency of that sort that shows on an intraday basis that I've seen. You know, so it's just doesn't make sense. So then you have to come back and say, actually, price is not efficient. Okay, so now we come back to what we know is the reality. The price is not efficient. Well, then the technical analysis still, you know, then at that point, shouldn't the technical analysis be almost completely useless? Right? If the information is not embedded in the price, then you just have to have the information, right? You have to have the information, and you know that it's lagging to some extent doesn't necessarily matter, because we know that information isn't necessarily priced in, right? Yes, we can have information that is not correctly priced into the market And we can trade it as the market is starting to price it in, essentially. Or not price it in, but as those orders come, right? So yeah, changing expectations can predict future orders. And they can predict future orders over a long time horizon, you know? Because like the traditional view of technical analysis is that like it can only last for so long. But what we find is actually you can have, you know, flows that take multiple days that you can predict. Right. So then what these things are is predicting future orders. Predicting future orders. I think that News Squawk predicts more future orders than anything else available to us. So, from that perspective, coming back there, do you think that there is something available to us that predicts more future orders than the News Squawk? I think what Uzi was getting at is when we combine all of these things together, when we combine all 5 of these things together, how much alpha does it actually result in? Or like, what percentage of the flows are we actually able to predict? And I think it's still a very, very small percentage of the flows. I think that it's enough that you combine all of those things together, and then on top of it, you have a lot of capital to begin with. That somebody could make a reasonable amount of money from it. But I wouldn't expect it to be like... I would expect it to be somewhere on the order of 20% per year. You had like $1 million. Combined all of those things and we're scalping, I think you could maybe make 20% per year. If you're really, really good at it. Maybe more than that at the beginning, but the upper limit on that is 20% per year. How does News Squawk predict future flows? Because the News Squawk provides us can help us determine changes in expectations about future flows and fundamentals. And that is predictive of future orders. You think the News Squawk is best only in the current Trump market? Well, so I think it's kind of been mixed. I feel that in this Trump market that the News Squawk has been hard to trade those Trump moves. It really has been kind of sneaky and tricky. But generally speaking, theoretically speaking, I would say that, well, both generally and theoretically, which is to say, this time around, I think it's been difficult, but I certainly felt that there was a lot of edge in it last Trump term. And I think that there will be more opportunities ahead of us, even though these ones have been tricky. But I would say that there was still a lot of edge to these things even during Biden's term. How does it predict future orders? So a piece of news comes that tells people things about what the future flows and fundamentals are going to be. And they place orders because of those. So like the classic example would be like the non-farms payroll. When the non-farms payroll comes out, suddenly you have a new piece of information that changes your expectation about the future flows and fundamentals. And then people place trades, place orders because of those. What is happening with indicator vendors when Kraken? Supposedly nothing changes. I don't know. I'm interested that, by the way, now we have almost double the number of votes, but the poll is still pretty much the same, with 53% of you saying that it is bad for NinjaTrader. And one might think, well, 50-50, that means, I guess that means that we don't know. But I would say that 50% of the user base thinking that a move is bad is not a very good thing for a community. 50% is too high. Say liquidity hole. I mean, more broadly, the treasuries, they did make a new high, but it's still, Delta's kind of flat and kind of weird. Really seems like it's in a holding pattern of some sort. I would normally expect better action than this on a Thursday. I'd say it's slightly quieter than I would expect on a Thursday after Federal Reserve meeting. Down here in technicals, like technicals that I think predict future orders, auto correlation effect of order flow sign, and then theory, market maker positions. Correlated instruments. When Schwab took over Thinkorswim, it turned out to be not a bad merger. I thought it would be terrible. I don't know, man. I kind of feel like that Thinkorswim isn't quite as good as it used to be, though. But I guess you're right that for customers, it ultimately didn't matter. Ultimately didn't matter. I mean, I think it's kind of naive to believe that this merger is not going to affect NinjaTrader's strategy. Right? But I just don't know how it will affect it. Whether that's a good thing for us or a bad thing for us, you know? Hmm. I'm to the point in my life that any change is bad from my point of view. Oh, it's actually switched. Now we're to 19 and 53% of you say yes. I really think that I could go and, given 6 months to a year's worth of full time, that I could go and make my own futures and stock trading platform that would be better than NinjaTrader. I really believe that. But I think that I would build it and people would just kind of go meh. That's my fear. Is that it would be just like everything else, that the larger public just kind of shrugs and doesn't care. That it wouldn't be able to sell enough of it to justify the amount of time put into it. When it used to be that I would get a lot of channel views from search. And like YouTube changed in a way that it just doesn't, my channel just doesn't do well. And maybe it's just that, but I feel like that generally speaking that I've failed in that respect. And I don't know what else more I can do. And that pivoting into making my own platform doesn't resolve that fundamental problem. But it sure does kind of seem like a situation that could maybe help jumpstart making your own platform. Or could help you justify making a startup around it. Because, like, now you got a price tag. Wow, this is a business is worth $1.3 billion. Wow. You love the upload. Thank you. You know, it's a lot of stuff that I've been teaching here on the live stream for a long time now. But now it's finally all in there in one video. Which video should I make next for the indie? I suppose the next one that I need to do is the dollar index. Yeah, the next one I have to do is the dollar index. But after that, maybe Alice and the gap. And then I think that we have a good enough coverage. I don't know if the other indicators really need like a thorough. I mean, maybe you could make a video about the free indicators. I guess part of the reason I'm so agitated and thinking about these things so much is that, you know, I've basically gotten to the end of my unemployment benefit. And I haven't been able to do as much work as I would like because I have to watch kids while my wife works. Which is a really shitty deal, guys, because flight attendants don't make much. Flight attendants is not really very, you don't get effective return on your time. But it is nothing else I can do. And so like I put everything that I could into my channel and it didn't move the needle. Okay, can I really justify putting that time into it anymore? I kind of feel like not. But then what do I put the time into? There's not really something that replaces it in terms of trying to make income, you know? So I'm trying to find a way that I can, but every step that it goes, it's either that same problem or there's not enough time. So I think that what happens is I just spend less time making videos, and not do anything with that time. I don't know. I haven't been trading. I haven't made a live trade since August, since I don't want to place a live trade when I'm unemployed. You know, like we have an account, right? And if I made a mistake and I had to like refund that account, wouldn't have any, you know, discretionary money to put into it. So I have to make sure that the funds that we do have and the income that does come into the stream lasts as long as possible so that we can continue to stream. Hence, no live trades. But we were doing live trades before that, and we're doing pretty okay. The funny thing is that since that time, I definitely take a lot less when we're talking sim trades. I don't take very many sim trades, but the ones that I've done, like the performance on it has been really, really good. My hit rate on it has been suspiciously good. You don't think you found one YouTuber that trades a real money? Oh, that's not true. There's plenty of guys that they're trading a real account. Well, there's lots of guys that are trading combines. Does that not count as real money in your view? Then that's probably common. But you know, you might say, oh, I want to see somebody that's trading like $100,000 portfolio or something like that, right? And I don't think you're going to find that because that would be foolish. It's the real conundrum. The real conundrum is that success in day trading, like really success that's like really retail traders are gonna like pay attention to, you know, really requires you to invest a large sum of money. And if you had that large sum of money, futures trading wouldn't be a very good place to put it, you know? So it's I really don't know if there's any way around it. Like, you got to understand, I am not trying to encourage people to trade futures. If your goal is to day trade futures to make your entire income from it or something like that, it's a pipe dream. Go do something else. Seriously. If you're going to do this, you have to be doing it for reasons other than to make money. To some extent, I use the futures trading as a loss leader for my other investments. Like, I understand better about what's going on in the stock world and how to manage my stock portfolio because of what I do in futures trading. And I have gotten to the point where I would say that the futures trading overall, you know, if I would need to size up to like full contracts again. But because basically the profits that I do make, because they're so teeny tiny, like well, not the commissions, but like the data and the platform fees and all of that kind of you know, it doesn't make up for all of that. Right. What if I sized up the full contracts? Then I could probably do that. But like the amount of money that I would be making would be probably comparable to like risk-free rate of return. Let's go to this casino. No, casino's not fun. I got all the pretty flashing colors and noises in front of me now. They sell the dream of trading those who trade huge accounts on the down low. But I'm super skeptical of these retail traders that are trading huge accounts in futures. Stocks is a different issue, but in futures, look at Axia. Well, so first of all, should we consider Axia retail? Maybe a different thing, but See, the problem with Axia is that I don't know what their overall group, like what their return on capital actually is. Like if you go to Axia and you take out all of the revenue that is created from selling education and the YouTube channel and all of those sorts of things, right? And then you're just only looking at their trading, and then you're combining all of their traders together, of course, not just looking at one individual guy. What is their return on capital? Are they hitting that 20% per year or something like that? And just because you don't see them does not mean they don't exist, but it doesn't mean that they do exist either. All of Axia's good stuff appears to be behind a paywall. Well, from the stuff that people have shown me about their education, I've kind of been like, eh. I like to see ICT trade a real account and see how fast he blows that account. Well, I think that he's tried real accounts and blown them many, many times, I think. So I think right there that ZN is selling off a little bit because of the equity correlation again. There was a bit more delta on that, and it was across the board on that one. So that's the first move that I've kind of seen here in the treasuries that's actually interesting to me. But it's a tiny move. I bet you can't even qualify. Oh, I bet you can. I mean, you should be able to try 3 times and get it, probably. The thing that I think is so funny when you go and you look at the trading world is that most people cannot back up their strategy with any kind of like real empirical data or any evidence of that nature. And so if you question them on their strategy, they always try and turn it into some sort of a pissing ego match. It's like, well, who's going to make more money? No, right? Because for most people in futures trading, it really is kind of ego. Like, you're kind of doing it because you think you're smarter than other people and you're going to figure it out. That's the dream in general. And the things that people use to try and, you know, puff themselves up, I think are hilarious. It's like the biggest one is that they have a funded account. Okay, do that. You do it 4 times and you should be able to get one funded. Doesn't mean anything. They made money 1 year. Doesn't mean anything. I see all of these people that they have followings based on the idea that they're a profitable trader, and the periods of success that they've had, I think, are laughable. So I've always traded smaller because I trade my own account, but I've had periods of profitability that I think blow most of these other gurus out there out of the water. But I'm never going to promote myself on that basis. I think it's dishonest. Because you're giving people some impression of what their results might possibly be, and they're not going to match. But that's what they behind as well. Yeah, catch 22. Like the thing is that I could give you every piece of empirical technical information. So like, let me present it this way. If I took 100 people, okay, and they all traded, if we kept them within certain rules, okay, like, I think that the easiest one is you can only take 1 trade a day. You can only take 1 trade a day and you hold it for 30 minutes. Okay? Because I have an algorithm that does that. It picks a random time to take a trade. It only takes 1 trade a day and it holds it for 30 minutes. Okay? So if I took 100 people and I said you can trade however you want, okay? After a year, I would expect 30 to 40% of them to have some profit. Like, forget about commissions and all that. I would expect 30 to 40% of them to have a profit. Okay? That's random. That's random. Okay. If a method is an effective method, right? Like, I have a program and there's really edge to it. So like the whole thing is everybody thinks that there's ICT, that there's a real that there's a real thing to it. Okay? So if it's effective, well, you can't just say this one person made money with it, because I think that's what they do, is they say, oh, well, of course it's profitable because we know that there's these guys that have been profitable with it. No, because randomly we would expect 30 to 40% to make money. So really, for a teaching method like that to really have edge in the way that they claim, you know, that the market really does follow this pattern, and if you just follow this pattern, you're going to be profitable. I think that I would have to take 100 traders and 50 of them would be profitable at the end of a year. I think to really prove that a method like that was really effective, I think that you'd have to get like 50% of them at the end that are profitable. Now, if Seth was the teacher I took 100 people and they traded for a year. Would I hit 50? Well, I would hope, but I don't think so. I think that it would still be 40%. And why is that? Because there's only so much edge that you can pull from the technical data itself. And that's the only stuff that I can really teach you, right? That I can teach in a classroom, and then you're going to go off and do it on your own for a year, right? No. Because, like, where is the real edge? The real edge is what you know, the information, stuff that you're reading about on Zero Hedge and Twitter and institutional reports and all of this economic data that you're getting and these sorts of things. That's information. And that's not something you can teach, right? That's something that, like, either you have the resources and you're informed or you're not. Right? If I was somehow able to filter it down to people that actually had that ability and resources to be informed, and then I was able to take 100 of them and teach them all of the technical information that we know about how the market really behaves on top of that, then I think that we could get 50 to 60% of them to be profitable. You get what I mean? So it's really kind of crazy, the assertions that most gurus make to try and get you to follow them. Now, well, let's see them try it. You should be able to take 100 ICT traders, let them only take one trade a day, to tell them you can only pick an entry, hold it for 30 minutes, you can only pick one trade a day. And see what percentage of them are profitable after a year. And I'm going to bet you it's less than 30. Less than 30. Yeah, and they highlight that very few wins, and when they try to generalize those results, yep. They try and, that's exactly what happens. Like when I'm sitting here reading r/, I don't get those kinds of people in the live stream very often, but like when I'm reading r/day trading and the guy says, well, we know it works because there's some people that have been profitable with it. My immediate thought is, you're too stupid to be day trading. like that in and of itself is a flaw in human reasoning that kind of suggests to me that you're not very intelligent. I don't know, like, where on the IQ curve that puts those people, but I can't imagine how somebody could go to a university and then say that sort of a thing, you know? Next time somebody asks me that, I'll ask them, did you go to university? I was doing this last night. One of my kids, they had like a missed assignment from last term that they're making up. And the assignment was basically like make an argument for why there should be school uniforms. And, like, she supposed to find articles and stuff and quote them. And basically all she did was quote the opinion of the article. This article thinks that there should be school uniforms, right? And the whole thing was like you had to find like the sources and quote the sources and have like a bibliography at the end or whatever that is, right? And you were supposed to do it in the library because you have access to it. And I'm like, no, just go and find an article. So like I had to explain the whole, okay, this is how these things come about. This is what empirical evidence is. What you really should be doing is you should be looking for a study that says, hey, they went and they looked at schools that did have school uniforms and did not have school uniforms and compared them. And we found that the ones that did have school uniforms had less violence, or that the students' scores improved. And then we could say, well, maybe that's a correlation effect. So then we should also look into schools that did not have a school uniform and then moved to having one, and vice versa. And we found that when we moved over to having a school uniform, that students performed better. And then when they went off of a school uniform, students performed worse. And that's empirical evidence. That's like you could go and you could do your own study and you should be able to find the same results, right? And then that's what you're citing, right? And it was kind of curious to me, like she's in 7th grade. So I'm like, is that beyond the skills and ability of a 7th grader, or should you know that by 7th grade? But then I was thinking about it and I was like, it seems to me that most retail traders don't understand that sort of a thing, because they're not looking for that kind of information and evidence when they base their trading strategy. They just ask a friend that claims they've made money and do what they're doing. It's just, I don't know. There's a lot of ways to be profitable. Prove it. If you can even prove one way to be profitable, right? So the issue that you kind of have to deal with is that, again, if I had 100 people to follow their performance, and I put them within certain reasonable rules. So that is like a key thing to know, is that like why is it 95% of traders fail? From my back testing and things like that, it seems that the primary thing that kills retail traders is over trading. What happens is they end up taking more trades during times when it's not a good market for them, and that's when they lose all the money, right? Ian, my God. Fucking hell. This is just so ridiculous, dude. Are you Tilt? Is this just Tilt coming back again? It has to be, because he's been here this whole time. This is just classic Tilt, right? Is like, I just said something. I was like, coming in and saying that, oh, well, this one time that made money and then that proves that it works is a stupid thing to say. That's a low IQ. Is it just straight up low IQ? Tell me, Ian, do you have a university degree? Do you have, maybe you don't know Tilt. We have a guy that comes in that tries to troll our stream, and he creates different names, and he does the things that you do, which is like, after I just said something, and then they go and they make a comment that is basically like the perfect example of the fallacy that I just mentioned. Yeah. Not one time. But answer this question. Do you have a university degree? You have a graduate in what? You have a degree in what? I don't know. You said a graduate degree. That's a little suspicious about what that means. Because I'm not talking like you went to a community college or something like that. I mean like a university. Like you went to got a bachelor's from a university, or a master's. If you have a master's, that would be even more shocking to me. AO says this is becoming boring talking to retards. It really is, right? No, he's not answering the further questions. How can you be to a university level education and not understand the concept of a probability distribution? Okay, a master's degree in what? What was your major? Yeah, now I'm sitting here going, okay, so is he lying to me, or is the university system that gotten that bad? Like, I love how you resort to attacking someone's intelligence when they say that they can do something that you cannot or have not done. You haven't been listening this whole time. I bet you that I can go and find a period of my performance that beats your performance. I bet you that I can go back into my performance. We've been doing this like 8 years. You've probably only been doing it 1 or 2. I bet you that I can produce a P&L, a period of P&L that beats whatever you show. Okay, but here's the thing. If you take 100 people and you have them trade within a certain set of parameters, 30% of them will come out profitable. Like if it's just random, 30% of them will come out profitable. 1 in 3 chance. 1 in 3 chance is profitable. So one person's results doesn't prove anything. One person's results is... Okay, cool. You were lucky. Doesn't help anybody. Yeah. If you don't disagree with me, then why would you use that in an argument? Why would you use that fallacy in an argument? Unless you're like intentionally trying to scam people. You never claimed to be profitable? Well, here's the thing, Slim Shady. My definition of profitable is you've made money 5 years in a row. So I don't claim, I make no performance claims. I make no performance claims. Right? My whole point here is that you cannot just use your trading results as evidence of the effectiveness of a strategy. That's why everything that I teach you guys is based on empirical evidence. Things that you can actually verify are true. Why? Yeah, it would be really nice for once, to have somebody come in here and try and argue with me based on empirical evidence. Wouldn't that be something else? That would be so fucking awesome. I don't think it's ever going to happen. Yeah, okay, let's do a little bit of filtering and stuff here. Hold on. What would be the best way to do this? It's gonna take a bit. It takes this, you know, you're querying database records that haven't been touched in a while. You made your own style DOM in NinjaTrader? Show it to me. You're a bunch of wolves. Well, we are, because they have a lot of practice, Ian, because if you're not Tilt has been coming in every day for the past 2 weeks and giving them plenty of practice, and they all know the stupid things that he says and immediately jump on it. Okay. Oh, that's funny that it doesn't show you by year. $17, $18, $20, $19, $20, $21, $22. We start with 2022. Can you create a version of your inventory cost basis indicator with a rolling period? Asks Gus. I think so. Actually, like you kind of can, but there's kind of some problems with doing it. I really don't think it would be useful on a rolling basis, though. Okay, here we go. Look, here we go. Me trading in ZN since 2022. So 3 years of data, I guess. It says I've made $23,000. Does that satisfy you? I really don't, he's trying to make us feel all bad. I think this is funny. Again, I kind of think that it is Tilt, especially since he's thanking Slim Shady, right? Because that is a pretty good, because that's one of his opus operandi, is he has multiple accounts and tries to back each other up, right? He's using all of the same tactics. I really do think that it is Tilt. And broker statements, well, a lot of these are sim trades. I was just telling you, we could find a period of profitability that worked really, really good. We could go and find one. We could go and find one that was only on live trades too. Let's see. Oops. So like we can go and we find a spot period, and then we can show broker statements. But like at that point, I don't think that it would really be very interesting to you to see broker statements. Okay, good. Unsubscribe. Thank you. Yeah, I didn't finish my thought because he's trying to make us feel bad for like losing a subscriber or something. But again, it's like if those are the kinds of arguments and things that you're going to use, I don't think that we're missing out on anything. Yeah, I showed you. Well, you wanted to see a period of profitability. The whole point here, Slim. I mean, man, I kind of feel like you're missing the point. I think that I definitely think that Shady is also tilt. Because he's coming in with like, he doesn't have a point. He's just trying to do everything that he can to try and undermine me. Yeah, don't forget to unsub with all of your accounts. Yes, thank you. Okay, let's see here. So if we change this to be... no, I don't think we want to do those ones. No. I'm just turning off all of the... Man, it's kind of funny to go back and think about the ones that were trading combines and stuff. Like when you look at the number of accounts that I've had, when you include those and you include all of the different NinjaTrader account ones. My attack on Ian was completely warranted. It was complete. He said something stupid. If you don't like being attacked, listen. On Speculator Seth's live stream, if you don't want to be made fun of for saying stupid things, don't say stupid things. Because even if you were here in person, I love making fun of people when they say dumb things. I can't help it. I can't help it. If you're going to make that kind of a logical, statistical fallacy, I'm going to point it out. That was it really was, right? It really is. It's totally him. They're both tilt. Okay, let's see here. Oh, I think I should take that one off too, huh? I'm just making sure. Okay. Okay. 7. So when you count all of the different ways in which, like, trading on different platforms and switching brokers and things like that, I've had 7. Isn't that crazy? No, you're so smart. No, Ian, you're making a dumb argument that somebody else makes that is dumb. Just go back and watch yesterday's stream. Okay. Oh wait, why is it not going all the way to 2025? That should be, I don't know. That's okay. Yeah, okay. I need to have it be like the different... I wish it would do like multi-plots. Suppose I could put them all into Excel and filter it myself that way. Well, I'm just going to do it the easy way. Oh, why is that one only has one trade in it? Boo. Okay, that didn't help. Wait, it said there was 7. There we go. 7. Saying how is there multiple ways to be profitable? And then I said, okay, if you can show me one. Said you can show me one, and then you said, well, I was profitable with this one. I was like, okay, that is proof of jack shit. It just means you were lucky. Like, yes, are there multiple ways to be profitable? Sure. But most ways to trade are not profitable. Oh, that's weird. So some of these do have trades on instruments that I don't think they should. So I think one of these actually is a sim account. I come in here and I turn off the full-size bonds. We've made money in combines. Yeah, open a real Ugh. I think any streamer is slim. I kind of think that you missed what I said. What do you let me ask you a question. Let's test your reading or listening comprehension. What is Seth's thesis? What is Seth's thesis here? Right? What is the central argument that I'm making? Yeah, now I'm just getting... Now you guys are just giving me projection. Well, I don't need any praise from anyone. I know you said that you did. Nobody made that argument. All you do is argue about people on YouTube. So now you're saying something that strongly suggests to me that you're tilt. No idea other than requiring proof of concept. Now, see, you're not listening. My, oh my. Do you really think that we're that stupid, dude? As it comes in, yeah, I'm almost positive that you're tilt. Here you have somebody not here for several hours. All of a sudden, after having a good morning, we're all having good discussion with the regulars, etc., etc., etc. And then all of a sudden, 3 accounts pop up out of nowhere that we've never seen before. They all become active at the same time. They all make the same arguments, and they just happen to be making the same stupid arguments and using the same stupid tactics that this same troll has been doing to us every day. And you think that you're gonna get away with that? We're gonna think that it's not you? You are tilts. If you're, listen, Ian, if you're not tilt, then you should really go back and rethink your life, because you're saying really stupid shit. I think that's the other thing, is that the other thing that makes me think that it's not really that it's, or sorry, the other thing that makes me think that it's tilt is that I can come in and I can talk about how dumb what you're saying is, and you're like, oh, I'm going to leave, and then you're still here, right? Because tilt isn't going to let an account go to waste. I think I'm going about this the wrong way. Hold on. Like, I really am not buying it. Must be the most fun you had in a while. Okay, you did unsubscribe. Now you're acting like tilt again. Okay. What is Seth's thesis? Seth's thesis is that one person's trading results provides absolutely zero value as to proving whether a particular strategy or approach or tool or service provides alpha. That's Seth's thesis. So, the reason that I was bringing that up, the reason why I showed you that period of profitability, was to show you that it doesn't matter. It doesn't prove that something works or not. It's one person's. It could be lucky. So you going hard on this, like, well, but prove that you're profitable, blah 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 blah, just proves that you're missing the point. Oh, why is it doing that? That can't be right. I've screwed this up somehow because I'm trying to have it show me my MES, the period when I was trading MES. And it's just saying like it only has like one trade. Yeah, so I have to filter out that one account. That's probably why. With the experimentation account is skewing the graph. Unblock him and see if why would that do anything. I'm just kind of looking at, I have 2 sim accounts in Jigsaw that I use, and I've kind of been irresponsible with them. So I was taking some things in serious that I should have only taken in experimentation and vice versa. And so it kind of makes it hard to view things. Oh yeah, I definitely gotta get rid of that one too. Yeah, it does. It's like dead internet theory to me, man. This is like, I have a group of about a dozen guys that come here every day, and I think that they all have the stream bookmarked. And then all of the other accounts are one troll. And YouTube isn't sending anybody else to us. Funny. It's content. I'm glad you guys have found today entertaining. I mean, if you want to reinforce your arguments about trading, you need best practice. Not really, because like the thing is that I really don't feel that Tilt ever makes an actual argument, right? His only goal is to make it feel antagonistic. Yeah, still got it back to that thing. So one of the problems I'm having when I'm looking through like my results, right, is that I've been doing really, really amazing with sim trades in Zen in the past 3 years. Basically, when I started experimenting with using multiple contracts and taking on a lot of risk, I started doing really well. And so anything where I filter it, trying to show stuff, it just picks up on that. And then there's other ones where like there's certain accounts that are just like terrible. So like on this one, the experimentation account is terrible because there's some individual bad trades on that. Improves it a little bit. Yeah, trying to do it, but not blocking genuine people. I don't know. I don't necessarily care. Like, again, there are certain arguments that even if there are genuine person, but they're going to use those arguments, that I don't want them around. But it's kind of funny because the whole how did we get into this was me saying, well, it seems like that most people don't actually understand what empirical data is. Most people don't actually understand how to, use empirical evidence to back up an argument, and how the whole journal article peer review process works, and all of these sorts of things. And that's why I was coming back to that. So, like, now you're saying something that kind of along those lines, and it's like, how could you have gone to university and not understand this thing that you can't just cherry pick one result and say, that's indicative of everything. Is there anybody which can back his trading? Well, but that's the thing, Frederick, is that empirical data will not back one individual person's trading, but it could back a strategy. It could. Usually not. Usually empirical data is just going to back that the market has a certain behavior, right? Like, for instance, volatility clusters. I think that's a really good one because that's one that I think most retail traders are going to be familiar with, that volatility clusters, right? That is a stylized behavior of market, or rather a statistical tendency that you will always see in the data. It's a proven stylized behavior of markets. I tell you what, treasuries sure are getting killed here as the S&P 500 recovers the overnight downside. Yeah. I am the only person I've ever seen on YouTube ever try to make any kind of empirical argument about anything with markets. Almost everything that you see on YouTube is, here's this approach to trading that they probably learned from somebody else, and their claim that it works is because it worked for them. Well, I would argue a single person or organization can make a strategy which can be empirically proven. Oh, okay, so yes, but then here's the thing that we get down to, is that all of the strategies that we actually know of that are bona fide effective, or maybe they aren't anymore, but they were, are strategies that are impractical for you to trade as a retail trader. Momentum strategy. You need a large portfolio. You have to hold positions overnight. You have to have access to a large array of instruments. Not practical. Because what are we saying when we're day trading? I'm not going to hold a position overnight. I'm trading futures on a small account, right? Okay, so if I can't hold positions overnight, I can do market making. Market making is a proven strategy, right? Well, that's not practical for you to do as a retail trader. You're not going to be fast enough. You don't have enough capital to take on enough contracts, right? So, if we set our bar, I guess you could say, to, is there a strategy which, using a single contract and never holding intraday on a future, that is profitable? Unproven. Never seen it. Except for being informed. Being informed is the only strategy we know of that can accomplish that. And guess what? As a retail trader, that's basically what you're trying to do, right? Okay, volatility clusters. Clusters is a description of a statistical property. So what it means is, if I see a large volatility day, I'm likely to see other large volatility days around it. So if it was, let's just say, for the sake of our, to kind of simplify it, that we had a statistical this is the statistical distribution of let's not draw it like that. Okay, let's say there's very few days that have like no volatility at all, and then actually I'm gonna do it like that. The most are going to be like this, and then it's going to be like this, right? So there's a couple of days where there's like really, really high volatility, right? And if we were to like graph them out by time, you would see that like most days are like this. And if they were evenly distributed, then it would be like this, right? It would be random as to whether they show up. But in markets, volatility clusters. So if you got one big day, they're probably all close to each other. That's what that means, is volatility clusters. Probably can be low win rate, high profit, sure. But I've never seen any empirical evidence of a strategy. So let me be like really clear, because I think what this is a useful exercise to go through, because it kind of shows you where the problems actually are. Okay, so how should I do it this way? No holding overnight. One contract must hold for at least 1 minute. One instrument. Would call that cluster part of the same cycle. Okay. I'm describing to you a statistical term. Okay. So one such strategy could involve the economic calendar. For instance, yesterday's federal funds rate. Let the strat compare the forecast with the actual on real time and then automatically catch the move. Okay, so your theory is we can make a robot that trades based on actual versus expected on an economic release, right? Yeah, okay. So, and we're going to hold into these particular parameters. So would that fit those parameters? Doesn't hold overnight. We're only doing one contract on one instrument, and we hold it for at least 1 minute. Okay, so then I think that it would possibly qualify if you could show a backtest that showed that worked. But I bet you that wouldn't work. So kind of the problem is that changes in expectations about future fundamentals or order flows can predict future orders. But it doesn't necessarily affect future price very well, because you kind of have to be able to go in and say, what is people's existing positions? How big of a difference was it? Like, there's a couple of different pieces there, and I think that some of those pieces are ones that you would not be able to get systematically, unfortunately. Say a day of high volatility leads to more volatile days is infantile. Okay. I'm surprised that you've never heard of this before. I mean, it's kind of more like the way that it really works is that it tends to be like, and then you might have a day that's like this, and then there's still more volatility, right? Before it goes down. Yeah. So it's also, you see clustering in order time arrivals. So that's an even better one to look at, is like if we're looking at a timeline of orders, right? And again, if it was evenly distributed, then, you know, we would just see orders kind of randomly like this, right? But order time arrival clusters, which means that you get like a bunch of trades here, and then like nothing happens, and then a bunch of trades again. Okay, so how can you use that to be a better trader? So the reason that volatility clusters matters is because you get a far left tail. So if you sell options, then you look at the profit that you make is a tail that looks like this. So purely selling options alone is not a profitable strategy because volatility clusters. So if I've had a day where I took a big loss, then I'm likely to have other days where I take a big loss as well, essentially. So you have to have ways of accounting for that period where the volatility increases, for that cluster of volatility, is basically why it matters. So, and these are the sorts of like the Nassim Taleb types of strategies, which is like you can bet on something that's extremely unlikely to happen, and then when it happens, and you just make an absolute killing, and you continue to make an absolute killing because volatility clusters. Right? Or like order arrival time, right? So essentially what this kind of means is if we're sitting here, we're trading the treasuries and price is going to move up, what's going to happen is most of the time it's kind of be sideways, and then there's going to be this one period where it goes up and then it's going to go sideways. So if I want to make money and I wait for it to be doing something, and like by the time I can see that something's happening and I get in right here, and then it's going to be too late. So if you're looking at the clustering of order time arrivals, you know, a bunch happened right here, and then you have a period of nothing, and then a bunch happened right here, right? I can say, what would it be if it was evenly distributed? And there's basically a point at which statistically you're extremely likely to get a cluster of orders. So you can come in and take a trade just before that. And come in. That's why I don't really like to take a trade like when the market is hot. I know that this robot that's what it does. But that's to collect data. But in my discretionary trading, I'm always looking for the most boring nondescript area to enter into my trade based on a prediction of future flows. So I want to get into it before anything interesting happens. The inverse correlation between the VIX and ES is very yeah. The other really big proven empirical property of volatility is that implied volatility tends to be higher than realized volatility. In other words, if you take out the fat tails where there's high volatility that you don't expect, most of the time selling options is profitable. Most of the time. So going back to this thing, like when you look at like my qualifications here where I sit down, this is like retail day trader. retail day trader strategy, right? Violating one of those rules basically points to a strategy that exists that is profitable, right? So no holding overnight. So what are strategies that you can hold overnight? Momentum strategies you can hold overnight. And then there's some profitable strategies over there. One contract. That is also a thing about momentum strategies. You can't just trade one instrument. You have to trade multiple instruments. Okay. One contract, that would be like market making strategies. Market making strategies, there are effective, but you have to take lots of orders over a long period of time for it to work and manage an inventory to be able to take advantage of that opportunity, let's call it. So being limited to one contract where you just have to pick your entry and exit periods on one contract, that's like a severe limitation. It's like I think that that's really the killer one. So that I'm really not sure that you can work something out with like one contract intraday without you having access to a piece of information that the rest of the market doesn't, without being an informed trader. Most hold for at least 1 minute. What's that meant to filter out? Arbitrage strategies, right? Strategies where we as retail traders, we aren't competitive because we're not going to be fast enough, right? So that's why we set all of those things, is that when you come down to it, like really at the end of the day, you got to realize that the markets are not built for us. The market does not exist so that you as a retail trader can trade it and possibly make money. The market exists for rich people and large institutions to have liquidity to make the transactions that they need to make. And that's all. So the way that the market is structured is basically set up to favor those people. Okay, the economic. I really don't think that I think that using the economic calendar and the actual versus expected would be part of a profitable strategy, but you would probably have to have all of these other parts too. So I give you an example, is like you'll have a situation where it's the end of the month. So this is something to watch for next week. Let's see if maybe there's a place where this will happen next week. Let's look. We might be able to predict this. I usually don't try and do this, but next week. What do we have next week? Especially Friday. Okay. So something that could happen on Friday is we have the revised University of Massachusetts Consumer Sentiment. Okay. Which we were lower than expected last time that this was released. And this is kind of a thing that the market's been watching, like sentiment has been going down, right? So you could have a situation where the sentiment comes in and it's lower than expected. And you would think that based off of that, my prediction would be that the S&P 500 will sell, right? But what will probably actually happen on that day is that they will wait until the sentiment number is released. And then regardless of what this number is, they will buy. Isn't that wild that I'm telling you about a flow that I think I can predict almost a week in advance? What is that flow? That flow is end of month rebalancing on the or last day of the quarter. There's going to be a massive amount of buying in the S&P 500. Or likely to be a massive amount of buying in the S&P 500. Right? So you wouldn't be able to do it just with the economic news, right? So go back to this thing right here. That is an institutional flow, right? So in order to get really good trades, you have to combine all of these things, see what the net imbalance is going to be, and then take the trade, right? So the news thing could only be a small part. And while there is ways to get it, so the problem with this one, I've been able to find APIs that tell you all of the news events in advance. And I've even been able to find APIs that tell you what the actual and expected were, especially for past events. But like there's all kind of wonky things about them. The correct way to do this one would be to have a Bloomberg subscription, because with the Bloomberg terminal, they have a feed that gives you that. Right. But that's too expensive. So the answer is like kind of, but to really do it proper, you'd probably have to spend money, and it wouldn't be enough. You would need these other parts, and some of these parts, like with the news squawk, we would have to make something that like listens to the news squawk and is able to make inferences about the future flows from the news squawk. That would be super, super hard, but maybe we could do that. The institutional flow reports. This is one that can be done, but not with data that's available to retail traders. Right. There's just all of these. There's like a bunch of little parts. And there's so many. I really think that it's all of them together to really do it. So this is not really a system that's practical for one person to make. But we could combine all of those things, and if we had all of those sources, then I think you could combine all that together and have a strategy that is like a retail day trader strategy where they don't hold overnight. Let's not say one contract, but like all in, all out. Okay. Only trades on one instrument at a time. And you hold for at least 1 minute, and it makes 20% per year, then maybe we could accomplish that, yeah. But it would probably be a lot easier for you to just be able to do it all discretionary. Like, I bet you would build that robot system and put all that work in, and then it probably would perform about the same as a person. With all that effort in there. I also don't think that it would be back testable. Like some of these things, like social media sentiment, for instance, would not be possible to get historical data about, to be able to say what the robot actually would have done at that time. But we can forward test it, right? We can say, we built this robot and then it traded for 5 years and it was profitable, and then that's a profitable strategy. Cool. Then we've proven it. Then we've proven something, yeah. Because if I just do it discretionary, then we're not proving anything. The point is backtesting for empirical. Well, I bet you that there are studies out there that you can read about how the market behaves based on the actual versus expected of economic releases. I know that they're out there. But that's why, but what I'm kind of telling you is I already know what they're going to tell you. That it's more complicated. That alone doesn't make money. That alone. It's part of a good strategy, but it's only a small part. It's another storm rolling in. We got Thursday today, and then Saturday, and then that might be the end of the ski season. Okay, what do you think about the Forex factory calendar? So you can scrape it. I've actually tried doing that. Like there's some difficulties in doing it, but like it really seems to me like it's kind of been set up to prevent you from doing that, basically. But you can still do it. But the Forex factory calendar does not update quickly enough live to. Well, off to a bad start after this whole Kraken thing. I just got an email from NinjaTrader about a canceled ACH deposit that I didn't initiate. It probably has nothing to do with Kraken, but that's still funny. Oh, I'm surprised we actually got up to 33 votes. And 55% of you said no. Like, that's a concerningly high number. I really want to make my own platform. I got to figure out a way to do it. Basically, I've got to find a person that lives in Utah that, doesn't have any immediate income needs and is willing to be a co-founder, and their job as co-founder would be to watch my children when my wife is working. That's basically what I need. You say finally dumping? What, ZN or ES? No, I do kind of wonder on the ES thing. So shall we? It's almost time to go, so we should probably try and do this analysis. So remember I was saying that cumulative delta isn't really doing a whole lot for us. Okay. So there was this decline. I don't think that we could have seen that just from the data. And I didn't have any kind of predictor of order flow that said that we would start to see some selling there. And then there was this one. But from this point forward, and certainly from this point right here, I think that you probably could have said. So you might have been able to have gotten, I think if I had really tried to pull a trade out of this, the best trade I think I could have gotten would have been that. So 3 ticks in it. It's not very good, but then you did start to get this consistent decline in cumulative. Then you start to get something where the order flow was telling you something, right? I hope I can still use the demo feed of NinjaTrader. What demo feed? I think you can, as long as it's CQG continuum. The whole strip. still, I don't know. Like, I kind of wonder, it doesn't seem to me like people are concerned enough about this thing that like NinjaTrader users are going to stop using it or anything. But it is enough that I think that people are probably going to look up contingency plans, right? Well, good thing that Jigsaw is showing some activity over there again. I do kind of think that we're going to make our own platform. Like if, like today, I'm going to record another video. And then, you know, if I'm not really making videos every week, because that's a lot of time that I've used to make videos, what am I going to do? I have to program something. I'm going to have to program something. So it's going to be that. I guess the other thing I could do is I could try programming something completely outside of trading, like make a mobile game or something. I really want to make a mobile game where it's just like this endless menu. And like I could draw like this mind map. I think that it would be an easy base, but then it could get a lot more complicated. So you could have this set of menus where each item in the menu goes to a different screen, right? And then they can like all be circular. So like the first level would be like, there's a main menu, and then it goes to this main menu. And then these all go back to this, except for this one. And then this one would take you to the next level. And when you get to the next level, just the overall style of the menus would change. And then I would also think that instead of having words on the different menu items, that it would be like alien language. So it's actually like you're trying to navigate through an alien interface, right? Okay, cool. Like that's the basic of it. And the reason I want that is because I find that my kids, that they click through menus, whatever it is, and they just keep clicking through, and like whatever it is, like if it's something to buy or something like that, they'll want to click on it. So you can do that. You can have some of these will actually ask you to buy a cosmetic item. Okay. There's some monetization right there. But then I also think that you could make it like, if it's supposed to be alien language and stuff like that, right? Like you can make it really cryptic so that like it seems like the game is trying to communicate with you or something like that, right? Like each level is generated by AI to some extent, right? And you tell the AI to start trying to put hints. So then people start, they see, though, there's some binary code in here. What does that actually say? And then they go and they put it in. And what does it say? And it's like, help me, I'm trying to get out. Right? Like, make it so that the game seems like the AI is trying to communicate with the player. But would mostly be for toddlers that just can't help, that just want to click buttons. Make a new honey plugin that glitches again. Never do something like that. But that's my best idea right now that's like not day trading. I'm just so burnt out of making content that I really did make a lot of content over a 6-month period. And I feel like I have nothing to show for it. And some really good content too. Some of my best content. Yeah, don't know what to do. S&P could be turning here. That is a pretty decent pullback from the high. 15 points. I guess I'm just afraid to spend time on making my own platform because I don't think that I'll finish it. Don't have the time to finish it. I guess what it really is I wish that I had more effective things to do with my time. You know, like, I always have a side hustle. And so then you're looking at it with the side hustle, what can you do? Well, maybe there's, you know, some of these are long shots and everything, so it's not necessarily like super effective things that you can do. But it's okay, because you're not, like, your living doesn't depend on it, right? But now it's like, I could just do anything to make money. And like, the most effective opportunities I feel like I have in front of me, aside from applying to new jobs, are really, really disheartening to me. That's like your choice. This whole NinjaTrader thing kind of makes me go like, huh, like, it's curious that the timing of all that and everything. It does seem like a good excuse to like start a platform, but then I don't know how to make it happen. Maybe if I had a business friend that was like, oh yeah, I know how to raise capital for startups and I really like your idea, you know, then we could just go full bore, because I don't know what I'm doing and I'm trying to figure it out, but I'm not getting very good information from people about it either. It's another problem. Yeah. Maybe it just comes down to saying I'm going to do it, making the presentation, and then setting up appointments with people. And that's the best preparation and due diligence that I can possibly do. I've already done. And maybe that's the case, and I'm just dragging my feet. But I think I'm going to go and make this video and submit some applications. So I will catch you guys later. Stay excellent, team.